course. But to help us out with a quick analysis on the metal space, we're joined by Vikash Singh, VP Metals and Mining at PhillipCapital, who joins us on the show. Hi, Vikash. Thanks so much for joining in. Vikash, yesterday, Sunny, I saw a big spurt in steel stocks. We're wondering what's going on there because data coming out from China was rather mixed. What would you attribute it to? Coking coal costs lower, expecting volumes to pick up from here on? Could that be the reason?
So that is also happening. But if you look at one of the data is basically the Chinese property market data. So year on year, January, the second home sales was roughly about 60+% up. So that has given some expectation on the real estate recovery in the China. That is one of the reasons why the property market developers were also up in China, and gradually this flowed into the steel guys also.
Okay, so property market revival is something that's egging those companies on. Because in terms of your picks, I'm just looking at the note, the inputs that you have given us, and I believe you like integrated players. So what would the preference be out there? The two integrated names normally we look at is Tisco, Tata Steel, as well as SAIL. What's the preference between the two?
Our preference for SAIL is higher than Tata Steel because Tata Steel still got some problem with the UK, basically. UK, to be more precisely, that's the plant which is bleeding them, and probably this quarter also they would continue to suffer there. SAIL, on a contrary, would benefit from this fall in coking coal prices more than anybody else because of the inefficiency which sales usually command, plus the volumes are higher. So our preference for integrated plus SAIL is higher and followed by NALCO.
SAIL followed by NALCO. Got that. Vikash, good morning. From the stainless steel space, you like JSL, and I was looking at the trajectory there. It's been a really solid performance, right? I mean, in July of last year, the stock was, I think, 100 rupees, and now it's almost touching 300. Do you see a lot more upside here, and what could be the rationale for it?
Yes, we still do some upside from there because, see, the last rally, if you see, the initial rally was because they were coming out of this CDR. But now what is happening that their new blast furnace, new EAF furnace is almost ready. So going forward for next 2 to 3 years, you would see a consistent volume growth of 22%. That should drive the cash flows as well as the valuations going forward.
All right. Vikas, I wanted to ask you about JSW Steel. It's not totally backward integrated, but yesterday that stock was one of the big gainers out there. The volume numbers, they delivered some growth in the past year. It was a little lower than their guidance, but I think you all had already factored that in. What's your view on JSW Steel? Valuation-wise, it's relatively more expensive, but how do you view it from here on?
So one thing you also have to see the volume growth expectation or the potential for the company. Right now, if you look at the most of the large scale company, JSW has one of the largest spare capacity which is there. So they are already at 27 million tons kind of the capacity, but production is much lower. So without, even if they don't incremental capex, they would still be able to ramp up the volume. So valuation is, yes, a little bit higher, but they are the most efficient one, and incremental volume which is coming from the brownfield would be a better ROI business than the rest of the lot.
Okay. All right. So, but what is your current rating on the stock? JSW Steel, we get that. If there is volume growth that has to come about, they have capacity. What is your current rating?
So, in 3Q result, at around 760 rupees, we have put up a sale rating on the stock. But we are no longer negative on the JSW Steel at this point of time. We think that most of the fall in the steel sector has already happened. And few stocks are at a pretty attractive price. So JSW, probably we would put a neutralish kind of the rating. Should be a range bound between 7 to 750 rupees.
Okay, 700 to 750. That's where the stock is currently at. All right. In the non-ferrous space, you mentioned earlier that you like NALCO. But what is the call on Hindalco now for the long term?
So Hindalco lacks a near-term figure, but there is a gradual recovery in Novelis. So I believe that with the recovery in Novelis and as every quarter they keep on improving, the stock should perform. We don't see Hindalco below 400 because at that price, almost the worst performance of Novelis is already factored in. So downside risk reward is pretty favorable in Hindalco, but yes, it will take time in terms of the giving gains to the investors.
All right, Vikas, final question. NMDC Steel. What's the view out there? You know, the market capitalization is around 10,000 crores. One would say that is very cheap for a 3 million ton plant. The problem is they have a debt of close to around 5,000 crores as well. And for the plant to stabilize, it could take some time. At around 32, 33 rupees, what's your view on the stock?
See, the rally which we have seen recently in NMDC Steel was largely because of the news, and there are expression of interest to buy the assets. If nobody buys it, for the NMDC itself, it's difficult to run this mill and become profitable. So within next 1.5 to 2 years. So incrementally, we don't value it more than 12 to 13,000 crore kind of the thing. So another 15-20% kind of the upside could be there. But at this point of time, we are not very gung-ho on NMDC Steel's prospect until and unless it has been acquired by somebody, some private company. They would have the capability to ramp it up faster, even increase the capacity from 3 million ton to 6 million ton, for which the land bank is already available. In the hands of NMDC, it would still take more time for this company to turn around. So in the near to medium term, not very positive on the stock.
Okay, got it. All right. Thanks a lot for joining in. So that's on the metals, but let's get back